Yes guys, and we're back. Welcome back to the channel. It's been a little while. I've been a bit lazy as usual, but now is a good time to talk about the markets, so we will do just that. So thank you for joining. Hopefully you can hear me. If you can just confirm that in the chat, that would be helpful. I don't really want to talk to myself. Well, I am talking to myself, but it'd be good to know that you were there as well listening. So plan today is to try and make sense of what's been going on, what I think is going to be going on in the future, in the short term at least, because we live in a funny world as it is right now. I apologise in advance if I do some ranting, because that's kind of how I feel, but I'm in a good mood, so it'll be a good rant if there is one. Plan will be to go through, we're going to have a look at the dollar, we'll have a look at the NASDAQ as well, S&P 500 too, and then we'll get on to Bitcoin, which I know is most of your favourite asset for me to look at for you anyway, so we shall do that. Okay, so the dollar, it's on the down today. Why? Because the Strait of, I don't know how to pronounce this, Homs, I don't know. It's a strait anyway, in the where's it straight? Yeah, there's a little gap in the sea that all the boats go through, and that's how the oil gets around the world and all the goods and services. And if it doesn't go through, prices go up because there's scarcity. It's as simple as that. And Mr. Trump and co, backed by his Israeli overlords, I don't know if I can say that, probably shouldn't, but have been obviously bombing Iran, who then subsequently closed the strait as leverage, and they've just done some sort of deal which has led to some of what was perceived to be the pain ahead being alleviated, and as such today we saw a decrease in the dollar, with there being, or traders placing about a 60% odds on there being a rate cut again sometime this year. So obviously with inflation being a major risk, that was seemed or deemed to be rather unlikely, but since that's gone away, or seemingly gone away for now, the price or the value of the dollar's gone down on the expectation that rates will be cut. And I mean that's going to happen across the board. You know, it'll be the same with everyone else, who, particularly Europe, who are more susceptible or have more dependency upon natural resources because they've got none of their own, or they're stupid enough to have decided that they don't need them anymore. But that's another story for another day. So yes, the dollar's coming down. Now, generally that is a good thing for risk on assets, as we know, but they've been flying up anyway. So this is kind of a bit of a sort of, getting ahead of myself here a little bit, but it's a little bit of a concern for me today after 12 straight up days on the NASDAQ and the S&P 500 that, you know, it's now sort of said, okay, the strait is open. It's a little bit of a smell of a sell the news event after so many green days in a row. So I am a little bit wary of that. But I don't really personally have any short-term positions at the minute. Everything is kind of a much like more medium to long-term view as it currently stands. So I'm not paying too much attention to sell the news. I don't think it's a complete disaster, but yeah, as I say, we'll get there. So the dollar weakening, generally a good thing. So the NASDAQ, so I posted back here on the 9th of April that I got the vibe the bottom's in on equities. I got a bit of backlash off that actually, because people don't seem to like it when you get the vibe that something's in. I'll tell you one thing, if it wasn't for my vibe, then I would never be in the markets, because you've got to have, I don't know what it is, there's a bit of an intuition to this game that you just can't teach really. But a lot of the time that I've found things to be true about when the market's going up, it's when you get something, apologies for the messy chart, I'll explain why it looks like that in a minute, but when you get a fully bullish engulfing candle, which is then backed up by a week of relentless buying and sort of smelly good news in the market, where I bet honestly you could plot number of missiles fired on this chart. And then pretty much when they stopped being fired, the market went back up. And, everyone's waiting now to buy the news that the Straits opened. And when you get a recipe like that, and, you're sort of generally talking to friends, and, you can't really talk to too many people about crypto because they just think you're crazy. But if you talk, most people have got some sort of exposure to generally the markets and some sort of interest in it. And what you typically find is that they're terrified about the markets. They think you're crazy, that the numbers going up, and they read all the news and all the, doom mongering on X and everywhere. And they all conclude the same thing, which is that it's far too unsafe to be in the markets. And that is always, for me, a real telltale thing where you see, okay, missiles going down, numbers starting to go up, there's talk of peace deals and stuff. The market doesn't lie. The market always knows when the bottom's in, because that's where the smartest people are, and they start buying before everyone else, either because they have it, well, most of the time because they've got information that you and I just aren't privy to. So I'm a follower of the market. I don't get the exact bottom. You don't need to get the exact bottom. You just need to be in the game when they've done the bottom for you. And that's really what I would say I specialize in. I will say the one thing that I thought was particularly noticeable, and if you're going to take one thing away from here, I think it's good to know that when the 50-week moving average is broken, and then the 50-day moving average is subsequently reclaimed, that is almost always the bottom, for the NASDAQ at least. So here, it went lower than the 50, no reclaim of the 50-day moving average at all. And then this is a real mess. Sorry, I'll just tighten this chart up a little bit here. So we will take off that. That's probably all we need to take off. So this line here is the 50-day, and the yellow line's the 50-week. So here during, what was this one over here? 2025. That was probably the first. Yeah, this was the interest rate stuff. This was probably the first time the war kicked off. So just reclaiming that 50-week along with a 50-day, boom, straight up. Here, where did we get? We broke back above the 50 and the 50-day. That was good enough. Below the 50, back above the 50, and it's game on. And time again, this just keeps happening. So, did you get the bottom? Did I get the bottom? No, I didn't. Does that matter? No, not at all. Definitely not when I'm back into just refresh the portfolio mode and enjoy life. But anyway, I mean, overall, I've been consistent on this, that I do think that we're in the third wave of upside for the NASDAQ, and that's going to continue. The caveat is that we have people who are throwing missiles around, so it is possible that we see ridiculous volatility ahead. I think you just have to be prepared for that. I don't think it's a great time to be, taking on long-term leverage positions necessarily, because things can turn around pretty quickly. I don't think it's a very good idea to marry an idea in this market, that it's World War III and it's all over, or it's definitely going to be okay now because the blockade's kind of been subsided for a little bit, and, the boats can go through. I don't think that's a pretty good idea either. But it's, it looks pretty good at the minute. And I do think that the NASDAQ's going to continue on. My gut feel is to 33,000, all the threes, like the Masonic number. It's just poetry that would be the top for me. But 30K, I think, in my opinion, and I forgot to say this isn't financial advice, just you shouldn't be taking financial advice off people on the internet generally. But yes, I'll take what I'm saying with a pinch of salt here, because anything could happen. But above 30K, for me, I think that would mean that we complete what I said a long time ago, which is that I think we're going to be doing a 3-drive pattern, and then we'll get some sort of correction. But for the meantime, there's There's no sign of that. We've got bullish engulfing candles, blasting through super trends, taking out all-time highs. Markets, friends, next door neighbours, everyone, complete disbelief, don't know what's going on. They all sold the bottom, trying to be sensible. Never try and do what the crowd thinks is the sensible thing in the market. It's the road to rack and ruin. But yeah, so I think it'll be 3 drives. I think it'll be similar length of drive to the upside as we've seen previously. And we'll probably sometime this year look to get towards 30k on the NASDAQ, and it'll be a good time to reevaluate at very least. So yeah, that's kind of my view of the NASDAQ. I don't really see anything else really to comment about on this. I mean, we can have a look at the S&P. I'll have a quick look at the charts here. There's anything here. Marry me, Phil. I'm already married, unfortunately, but yeah, don't tell my wife that you're offering. Yeah, good to hear us. Is it a fake out? Well, yeah, we'll come on to Bitcoin in a little bit more detail, obviously. Back to portfolio mode and enjoying life. That is where that's got to be the goal. And I did post actually on X earlier on today. If you're not using the portfolio tool on TradingView, it's absolutely fantastic. For ages, I've been trying to update spreadsheets, like derive different assets and different local currencies back into my currency, and then I can't get the right ticker. I've tried using Google Sheets, all sorts of stuff. I've got different accounts all over the place, different sorts of assets and stuff, and it's been an absolute nightmare to track it. Never been able to do it, but I can get every single ticker that I want in TradingView, in the currency that I want, and several different portfolios as well, all in TradingView. It's absolutely brilliant. It's seemingly nobody else that I'm aware of knew that it was there either. So you just go to the products tab and go into that and start adding in your portfolio. So yeah, just a little bit of an interlude there. Anyway, I can't really be bothered to look at the S&P 500 because it's just kind of the same chart as the NASDAQ. Anyway, gold, yeah, this one I'm not too sure on, I have to say. You know, as you know, I was saying I thought that we would get up here, which we did. But there's still this like unknown. I don't have a narrative for gold. Not that narratives really matter, but I struggle to see a situation where everyone just starts dumping gold. I mean, obviously we're going to go into we're in a risk-on environment, so it's less attractive. It's probably going to do less well than it was doing. And then if we do go back into some sort of normal, in inverted commas, place to be, this will probably roll over. So the question is this a dead cat bounce? I mean, I'm not holding any gold in my portfolio at all anymore. I took profits and I may have reallocated it to our favourite risk-on asset once again. But gold relative to Bitcoin's really the chart, and we'll have a look at that in a moment. But the last dead cat bounce on gold was beautiful. Look, broke the 100-week and 50-week all at once, and then it was just down only for a few years. So these two guys are miles away at the moment. I just think this thing's probably going to consolidate up here, and then if things escalate, resolve higher. If things disperse and the war becomes not an issue, it's going to come down. So like having assets allocated here, maybe long term, that's fine, but short term, expecting continuation, I'm not so sure. Not at the moment. That would become clearer, if we see the 50-day moving average being consistently supported to the upside. Yeah, perhaps it goes higher. Silver, it's just the same story on a high beta basis, so not too much to report there. Right, so before we get into crypto, I just wanted to mention a new project that I'm working on. So 10 years ago, I foresaw where we were going to be today, which was with crypto and in this dystopian kind of world that we live, where privacy is just not really a thing anymore, and neither sovereignty, and everyone's trying to steal your money, like the UK government trying to now get their hands into your private pension and all that sort of stuff. But the question, and obviously we've saw many multiple hundreds of X on all of those assets, on the Bitcoin in particular. So that's where most of my thinking was 10 years ago. And 10 years later, I find myself with the same proposition, which is that I want to be 10 years ahead again. And looking at those opportunities is really, and researching them is really where I'm going to be putting most of my efforts in the future. So 10yp.io is the project. And I will be doing lots of research across loads of different asset classes. I will do a bit on crypto as well, because it does form some of the mix. But we're talking about quantum computing, AI, robotics, space tech, all of the infrastructure behind everything. Crypto is obviously a little bit of a part of that, because how are the AIs going to get recompensed? What does long-term digital assets look like in amongst this environment? But this isn't a crypto project. This is what's going to happen in 10 years, and it's all about the research behind it. So looking at deep dives into each of the different sectors, all of the different companies that are behind them, trying to work out who the new emergers are and all that kind of stuff. But there is a newsletter that will be going out. If I can get my arse into gear, it will come out next Friday, the first one. So go to 10yp.io and sign up to that if you would like to keep informed on the project. So yeah, anyway, to the main event, Bitcoin. So you might recall last time that we talked that there was a few things to look at when Bitcoin breaks the bottom, and we'll just go over that to establish where we currently are. So super trend to the downside on the weekly needs to break out. The downtrend needs to break, and you need to be above the 50-week moving average, which is the yellow, to really be absolutely sure, in my opinion, not with 100% certainty, but pretty much, that the bottom's in for Bitcoin in the past, and that would be a signal to go back in the market. Now, do I always wait that long? No, is the truth. Like, that's, there are signs ahead of time that the bottom may be in. For example, how deep's the order book relative to the asks? How desperately on Twitter or wherever are people telling us that it's over and we're going to, go down a huge amount more? And how good are all of their arguments about all of this stuff? I should take that off, actually. But yeah, so how many of those things have we seen so far? Well, we did start to get to see the breakout of the downtrend last week. Was it last week or earlier this week? I'm not sure. A few days ago. And of course, you see that on the non-logarithmic or the linear chart as opposed to the logarithmic chart. Now, that hadn't happened, or it hadn't happened yet that we'd broken out of the downtrend on the logarithmic chart, but we are actually going for it today. Now, this reminds me remarkably, like, there's always times, Bitcoin's effectively like a timeline of me finding out in the market, if you like. And this reminds me of this over here, because I tweeted the exact same things back at the time, which was primarily that we were breaking out of this downtrend here on a linear basis. And when the logarithmic one eventually broke, that was the confirmation that we were going to be going higher. And other things that are also always there for me are, the price feels like it should go down, but it just doesn't. It's constantly getting bought up, and there's always higher lows. And that's what was happening way back over here. And eventually we went on and we did a good old run up into COVID, and then it all shit hit the fan. If you overlay like that over here, like I did, or I had on here, it looks something like this. And again, one of the things I like to do is think about, like, where's things going to get really, really horrible if you've missed or if you're missing this train. And I think the answer is just somewhere north of 90k. I think people will be absolutely losing their minds if price gets back to around about 90k if they sold somewhere in here. And that would take us effectively back up to previous resistance over here. It would also be previous resistance here, and then briefly acted as, well, very briefly acted as support. Sorry, it was support over here, resistance, briefly support, and then continuation. So I think it would look something like this. And hey, guess what? I've left in a COVID-style disaster, because it would be poetic if we did actually rally all the way up, back up, and then ultimately come all crashing all the way back down. But something like that would actually need, one of these kind of black swan events to come into play. But we are still, despite things looking better, we are still in that kind of environment. I'm not saying that's what's going to happen. I'm just sort of, it's a bit more for the memes really. But something like that is not impossible. Could we come down here? I mean, I think the more likely situation is that you put in some sort of inverse head and shoulders here, and then it perhaps goes higher. So you get to this 50-week SMA, probably run these highs over here. Everybody gets drawn in, loads of liquidity, and then boom, back down to, I don't know, 80 or so, 82, 83k or something like that. Because actually that is ultimately what happened over here. We ran all the way back up to the 50-week and we rejected really harshly, and we came back in. I think this is where the Silvergate situation happened. So that 50-week is probably a bit of a magnet should we break up here. I mean, we haven't broken the super trend on the 3-day, and we still haven't broken it on the weekly, but you just have to ask yourself the question, do I want to sort of at least get back in the equation a little bit rather than wait for all of these things to tick off? In an ideal world, if it was like other cycles, we would have more time to consolidate, and all of this support and moving averages and everything would come down like it did over here. The 50-day was bang, slammed down here. The 50-week was slammed down. We had the super trend slammed down. But the environment that we're in is just not normal anymore. We're not in a normal, lovely environment. We're in a crazy environment where nobody really knows really what's going on. So I think you just have to be flexible with your mindset. So yes, like, we are breaking out. Does this mean we're going to fly back to 100k, like the whole cycle thing's over, blah blah blah? Don't know. I don't know the answer to that, but I do think that things are going to get more tricky for the bears. If we look at liquidity charts, where we're around 66, 67k at the minute, and there's just liquidity all the way up there. You can see there's this massive inefficiency here, which generally just gets filled, and when they get filled really fast. So that again would take you all the way back up to this sort of 93k level. People are talking about 80 in the 80s and all this sort of thing. That's just generally not how these reversals happen. They're more brutal to the upside, and they just give people no chance to get back in, and there's a magnet effect which drags the market all the way up until these people just cannot take it anymore, and they have to buy back in, and that'll be about 90k in my opinion. So that's where I think we're headed for now. Subject to change. It could all change this weekend if they start letting off missiles again and sinking a few ships. So, as I say, this is not guaranteed at all. But that's my general view of it at this moment in time. As price continues to go higher, you love to see it. It also just so happens to be about the measured move target off the bottom. So double this consolidation is about 95k. And then also beautifully, the 1.618 is the 100-week moving average. You love to see it when things like that come about. Honestly, I'm such a sad bastard. Anyway, let me just quickly check the chat. Yeah, no, still there. 89 people watching. Happy days. So yeah, let's keep going. So This was also part of when I said I think that we're in for a short squeeze, what I was talking about. We've had this big build up in open interest. So open interest has been supporting this move up. And the problem that we had with open interest was it kept on getting up to about this $25 billion level. And then whoever was pushing it up would just close the bloody positions and would come crashing back down. But if you were paying attention, you'd have noticed that we're just continually putting in these higher lows on open interest. So whoever was doing this, or generally as a whole, I like to think of it like the composite man idea, where there's like one guy who's against me. Whoever's doing this was still building their position higher, and they were just effectively shaking out the market. It wouldn't go lower. There was all this bad shit going on, but we just weren't going lower, and you have to pay attention to those things. And yes, we started putting in new highs, and we've still got all this open interest. And of course, when there's open interest, yeah, there's loads of people who have been buying this up, but there's loads of people who've been shorting us, and those guys are still short. Also, let's have a look at the funding rate. Generally lower. It's heading lower. You know, just being negative isn't that great. Being negative and it going down while price is going up is beautiful, because this thing's derived from people who are hitting the sell button and forcing the derivatives price down lower than the spot market. And this is a mechanism to punish those guys and to bring the derivatives price closer to the spot price once again. And so what this is telling us is that people are market selling into this. And there's a passive bid, and it's sending the market higher. Similarly, we find that the long shorts ratio, so the number of accounts who are long relative to those who are short, are going down. People are getting more short. They're either desperately selling, you know, people who are bearish, who believe that we are going to 40k no matter what, and they've got a tattoo on the forehead of it. They are continually selling. And I have a bad news for those guys. That's how efficiency gaps get filled. And then, of course, order book depth. So the best way to look at this, in my opinion, is as a ratio. I saw a few charts, like some chart clangers earlier on, someone saying, look at MACD. It's the lowest it's ever been. Well, of course it's the lowest it's ever been, because the price is higher than it's ever been. So the difference between the two moving averages is going to say, in numerical terms, the biggest amount it's ever been. So it's irrelevant. I'll always use the logarithmic one if you want to actually look at that properly. Anyway, order book depths working similarly. If price is up high, you're going to see in number of bids or in value of bids, it's going to look bigger now than it has done before. But anyway, ratio better to look at. And you can see that the bid-ask spread within, or the bid-ask ratio rather, within 25% of spot, which is, again, I think the best place to look, because that tells you, you know, is there a gap? So while we know that there's these liquidations, yeah, sure, there might be liquidations there, but if there's a shitload of people also waiting to sell, so if there's loads of asks on the book as well as the liquidations, then maybe the liquidations don't matter so much. But given that there's ratios telling us that actually there's a shitload more buyers than there are sellers within a material, like within a decent range of price, particularly levels where, you know, people are happy to bid passively, this tells us that there's still room for this thing to go higher, in my opinion. Could be wrong, but you know, let's go back in time. If we come back to the bottom over here, the bid-ask ratio was also looking pretty similar to this. What I would say though is, don't forget these things. All of these metrics that I'm talking about now, they could change like in 10 seconds time. Someone could move the bids. Someone could put in a shitload of asks. The long-short ratio could change very quickly. Funding could change, and open interest could change if people start closing out positions. So whenever you see this kind of thing, you really need to go and double-check from when they have posted it to check that it actually is still relevant. So it's a good backdrop for now for heading higher. As I say, how quickly does that mean we're going to get to all-time high? Does it mean that the cycle theories defunct, doesn't work anymore? I don't know. But we're in weird times at the minute. And I believe that there will be a great crash. The great crash will happen. It will happen when demand goes away because everyone gets fired from the jobs due to AI. That's what's going to happen in the future. It's just when. When does that come about? Let's have a look at a few other things. So MSTR, that is one that I loaded up on last week. And look at it. You love to see that. What's it up? 31%. You love to see it. Or I do anyway. But like MicroStrategy came all the way back to where it was before it went on a crazy run to 500, which is incidentally where I sold. And I did mention that on Twitter. But why do I think MicroStrategy is interesting at the minute? Well, there's the whole stretch product, which if you've seen the adverts for that, they are crazy. I don't know how they're allowed, actually. I think CoffeeZilla did a good YouTube on the stretch product if you want to try and understand what's going on there. But it's paying dividends of like 11%. And it's sort of implying that it's free money forever. So long term, yeah, and they can withhold the dividend. Actually, they don't have to pay it. So it's good for them. Not sure how good it is for you, but you get your money back after 10 years or whatever, which is pretty good. And hopefully you've got a fairly liquid asset that you could trade at the same time. So it's an interesting product, but it sounds slightly worrying for long term. That just doesn't mean that we can't enjoy it while the market's there. But anyway, it's given us this buying power again for Bitcoin. Which again, alongside the ETFs, has been showing us that we go higher. So the ETFs, I haven't got it elsewhere, but this is what the ETFs look like. So the cumulative flow of ETF acquisitions was putting in much higher lows than what retail were doing. So again, that was another example of why it looked like the bottom was in. But anyway, MSTR was, people were coming for this product hand over fist to give Sailor more Wonga to go and splash in the Bitcoin market. So yeah, another good sign that the demand is returning. And of course the MSTR premium, so I think it was like, I don't know, can't remember what it was getting to, but it was like crazy premium of premium being the value of the company over and above the net asset value of the business. So i.e. the Bitcoins less the debt. How much more was the company being valued at? So for me, I felt the MSTR was a reasonably priced product again, because it was pretty much flat against NAV. And then when people get excited again, I could see this premium returning. So I see it as being a bit of a kicker. And in the past, actually, particularly in the bear market and in the bull market as well on the final leg. So this is MSTR over BTC to try and show, how's it doing proportionally to Bitcoin. It bottomed and has put in this higher high with a ridiculous weekly candle, doing 23.5% more this week than Bitcoin has in terms of returns. So that's another relatively good sign. I think it's actually breaking this downtrend as well. That's the weekly downtrend. So definitely something to pay attention to. Could it outperform Bitcoin to the upside again? I suspect so. And one of the reasons why it does that is because this asset is available for people to trade in places such as the pensions, and in the UK you can buy it in your ISA. So you've got these environments which have a tax wrapper, as they refer to it, around the asset, and you can't buy like IBIT, and you can't buy, stop buying it. You can't buy IBIT, you can't buy ETFs basically, but you can't buy Bitcoin spot or anything like that, but you can buy MicroStrategy. So they do still have a competitive advantage over certain flows of money versus Bitcoin. So I see that as very positive as well. I would keep an eye on that. If that starts to turn, if the missiles start flying, it's not going to look great. And then another reason why I ditched all my gold for BTC. Well, I sold most of my gold ages ago. The money was just spare on the sidelines, to be honest with you. But rather than going back into gold, obviously, I felt the time was good for Bitcoin because we came back down to the number of ounces that is commanded by one Bitcoin is back to 16. It's on the way back up. So again, if you looked at this on the 3-day, it actually broke out of the downtrend before Bitcoin started trending down. It's putting in a nice cup and handle bottom here. So I suspect that this will also go on to greater things on the basis of everything else I've said, i.e. Bitcoin's, in my opinion, got a good chance of filling the gap. And at the same time, gold looks like it's just consolidating and making a decision what it's going to do next. So again, good to see for Bitcoin. Dominance, I have to say, I really haven't looked at this in a while. But I don't think, I'll probably regret this, but I don't think that dominance is ever going to go lower, back to these lows of like 40% or something. I just think it's just game over. Like, you know, there's the numbers up. It's kind of like, how many times can you pull people in to crypto and then fleece them without them working it out? I don't know. Like it keeps, there's always something. Like the meme coins came about, didn't they? Certain NFTs were there. So there will always be something. And, you know, maybe the next thing is how AI is going to interact, or if we get CBDCs, which seems inevitable, like how's that going to come into effect with Bitcoin share? You know, maybe this comes down, but what typically happens is the bottom happens in the Bitcoin market, and then dominance goes up. So I'd be pretty hypocritical if I wasn't to say that I expect this to at least come back to where we were before. But it's, I don't know, maybe it just goes sideways. I think maybe it just goes sideways. There's definitely signs that things are different this time. You know, we didn't get dominance come all the way back down here. And like, what event is going to make that happen? I just don't see it, you know. And then, you know, the whole cycle's weird this time. You know, we've got a billionaire obsessed with Bitcoin, splashing the cash at the bottom of the market. So, you know, we don't have Sam to lock up this time. So he's not committing his fraud. I mean, Saylor's Ponzi might be even bigger than FTX's long term, but I can't see it just falling over anytime soon. So maybe it is different. I mean, maybe the new like the cycle kind of ended when it did, on time, as it does every time. And if you think about why that might have happened, why it may have occurred the same sort of way it always happens, is because, number one, it's a round number of 100K, and that was the goal for a lot of people. And number two, well, number one is it was 100K, and number two is it was the cycle timing again. So you got a massive amount of supply up here, and price comes all the way down. But, you know, we don't have any disasters on our hands at the moment. You know, we survived remarkably well given the situation in the Middle East, and all of that's a sign of strength. So the market folding over like previous, like I showed before, could happen. But for now, it doesn't seem to be the case. So I just don't see it happening. So I guess that's it for now. I mean, you know, I will come back and talk more. And as I've said, please go and sign up to the new project for what the world might look like in 10 years. And hopefully we'll do the same thing we did last time, 10 years ago. So that's 10YP. But other than that, I hope you enjoyed listening. I will listen to the I will have a quick look at the comments. We've got a fucking quite and shitty resolution as always. Oh, same to you, mate. Yeah, okay, so there's not much commentary there. I don't know, if you've got anything you want to hear back from me, if you've got any questions, just hit us up on Twitter, and I'll get back to you. But otherwise, thanks for joining, and here's to hope